Good morning, team, and welcome back to another daily market update. My name is Fabio, and today we're going to be diving into the major dollar pairs and identifying potential trade opportunities. Now, there is chaos within the markets. European stocks have had their worst week since COVID in 2020, so that just puts into perspective how the market is reacting to this tariff news from Trump. It is still absolute chaos, so let's see if we can identify any potential trading opportunities. Now, first of all, EURUSD, guys. EURUSD is actually the cleanest major dollar pair out there. As we can see, the overall area of daily demand here has been holding. So this green zone, that is where I was initially looking for potential further longs from. And as we can see, we've continued to push in towards the highs. The euro is still gaining more strength against the dollar, as the dollar is still seen as an asset that is extremely risky. People or investors, banks, countries would preferably put their capital into euros as opposed to dollars at this point in time, due to the uncertainty surrounding the overall trade policies and the political policies or the economic policies of Trump himself. Now, euro dollar is still looking good to push further in towards the highs. If we look at this from a weekly perspective, we can see that last week, once again, we saw another strong weekly candle close. At this point in time, we've been rejecting this overall weekly area of supply. That caused a pullback, but as we can see, this overall sell for the buy here is still the overall zone that we tapped into and that we're looking for further upside from. From a weekly perspective, as long as this fractal low here holds, I am still very interested in further upside. Also, from a daily perspective, it still makes a lot of sense for further upside. Here we have the daily fractal low. We reacted to this area of demand over here, which was inside of these two wicks. If we go onto the 4-hour time frame, it will become a little bit more clear, where you have a very clear imbalance over here in the form of a doji candle, which is your overall area of demand. Now, what should we be looking for on EURUSD? Now, for myself, I'm only interested in further upside, as I still see the uncertainty surrounding the dollar as something that is going to cause further weakness for the dollar and push EURUSD up higher. Furthermore, EURUSD is simply extremely bullish, with demand obviously here being in control. Now, looking at the 1-hour time frame, which for myself is the cleaner time frame of them all, what I'm looking for here is potentially further upside, because what we had here was a beautiful area of demand. So just to put this in perspective for you guys, what happened here is that we had an obvious internal downtrend, right? So we can very clearly see the overall push in towards the downside. Here we had a fractal low break, here we had a fractal low break, and then what happened this morning is that we had a fractal high break. So here we had the market structure shift in towards the upside, the overall sell before the big buy up. That then becomes your area of demand. We tap into that demand zone, and from there we head up higher again. Once again, the overall sell before the buy becomes your demand zone. We tap into that demand zone, and once again, as of this morning, we're heading out of it. Now, we formed a lot of descending liquidity over here, so a lot of descending highs in the form of a trend line. That is currently also what we're reacting to, but as of this London or New York session, I'll be looking for a further breakout in towards the upside, following the overall immediate 1-hour order flow. Now, if we do see any further downside, for me, this is going to be another potential buying opportunity, and I'll just wait for the 1-hour fractal structure again to shift in my favor. But for now, EURUSD is on market structure wise still bullish, as we can see here on the daily time frame as well. We get the push up, pull down, push up, pull down, push up, pull down, push up. The overall retracement as well here on this daily time frame was again exactly into the 0.5 fib, and from there we've been pushing up higher again from the overall daily order flow, which is again just simply said the overall sell before the buy. Now, looking at where EURUSD could potentially head towards, my next target is around 1.12758, which is this overall swing high over here. At the moment, EURUSD is trading within a range, which is this box over here. We liquidated the range low by tapping into this green box here, and now I'm just looking for us to tap into the range high, which is above this black line of 1.12758 and this green box over here. So that's my next major target before really seeing any potential further downside from EURUSD at this point in time with the information that I have. Now, looking at the dollar index on the other side did precisely actually what I kind of like wanted to see. We can see again that from this area of the weekly, so this weekly area of demand, again, why is this weekly demand? Because it's a sell before a strong buy up that broke market structure here. here, and also here. Now, this is then your weekly area of demand. We tap into that weekly area of demand, but for me, this is just an immediate pullback, or providing an immediate pullback in towards where? In towards this area of consolidation, which is our area of supply. Going on to the 4-hour time frame, what we can see again is that if we measure up the overall 4-hour swing, we can, or will most likely see, a 0.5 fib retracement once again. So the 0.5 fib, again, acting as a natural area of resistance. Daily supply, pretty much also just very simply said, it's a support and resistance play over here that we're seeing. So what I'm now looking for again is the 1-hour time frame. Here on the 1-hour time frame, some very clean price action overall. What we can see is that we swept this high over here in the form of liquidity, and now this buy before the sell here is your overall supply zone. So as long as this high over here holds, and just to make it a little bit more clear, the high of this bearish candle, but ultimately as well the high of this bullish candle here, as long as that high holds, I'll be looking for further downside following the overall 1-hour immediate order flow. For myself, the dollar still remains very, very bearish in towards this week, as again, people do not want to be in uncertainty. People with a lot of money are going to be moving their money in towards the dollar, in towards the Swiss franc, in towards the Japanese yen, and in towards gold. Obviously, we'll have to see what the updates are going to be and what the response is going to be from the European Union and from China. That could change a lot, but for now, this is the immediate outlook that we have. The overall order flow is bearish in towards the downside. The bears are in control on the dollar, and it doesn't seem to want to change for this time being. So the immediate pressure here from the dollar is still in towards the downside, and from a higher time frame perspective, being the weekly, I am still looking for further downside in towards these equal lows that we have over here, and for the dollar index to hit 100 in the immediate short term. Now heading onwards in towards AUDUSD, because the Australian dollar has been hit pretty much the hardest out of all of the foreign currency pairs globally, especially in these kind of markets. What you're going to see is that risk on pairs are going to be hit the hardest. So just for you guys to understand, in the overall fundamental spectrum, we have on one side risk on, so I just call this RR, or R on, excuse me, and then on the other side we have R off. So when we look at R off against R on, what this actually just pretty much says is that on one side we have, for example, the yen, we have, for example, the CHF, and we have, for example, as well being gold. Well, all of these have been extremely strong in the current market sentiment, right? People are risk off. People do not want to be in risk assets due to the global uncertainty. And on the other side, we've had the risk on, which is obviously the AUD, right? So this is not an N, but it's actually an A. And we have, for example, NZD as well. And you could also consider CAD to be a part of that risk on as well. So risk on has been extremely weak, and these are always the currency pairs that are being hit the hardest. Now, especially if you look, and I just want to show you guys real quick at, for example, AUD Swiss, you can see massive drop. If we look at AUD Yen, we can see a massive drop. So these currency pairs are being extremely, or hit extremely hard, by what is now currently happening globally. Now, remember, overall, I was looking for a further push in towards the upside on AUDUSD. Obviously, this has now changed with the current market sentiment that has been going on globally surrounding tariffs. So I'm still looking for a rebound on AU in towards the highs at some point. But for now, there is no, or it doesn't make sense to look for any longs, because you're just literally trying to catch a falling knife. Now, last time as well, when we saw this drop during COVID, it was also very unpredictable when the overall market reversal would come. From a technical analysis perspective, it's very hard to actually kind of like time the overall reversal. If we look back then, we can kind of see that was back in March 2020. So what you need to look at is from a fundamental perspective, okay, what happened back in March 2020? Was it, for example, interest rates being lowered? Were it stimulus packages coming out? Was it quantitative easing? Like all of these kind of things can cause a real market reversal to happen. And the same is what I'm currently doing with AUDUSD. I'm going to be keeping an eye on, okay, what stimulus packages are going to come? Is there anything, or is there going to be any major shift on, for example, interest rates? This week we have in New Zealand, for example, interest rate decisions, and these could cause, for example, a reversal on the New Zealand dollar. Like from a technical perspective, your demand zone is not going to be the thing that is going to cause the reversal. It's going to be the fundamental aspect behind it, and then obviously we'll use the technical perspective still to time that entry. But the actual reversal, that needs to really come from fundamentals, in my opinion. Now, looking at this for the immediate short term, downside is still the only way. I'm not really going to apply a lot of technical analysis to this. We can see that as of the London session, AUDUSD has been consolidating. It's waiting. It's made a massive move already. Let's wait and see what happens. I'm just going to be waiting. Preferably, you would want to take out the highs and then look for some further downside once again. But what I can see, at least on Bloomberg as well, maybe I can grab the chart for you guys, because it was a pretty interesting chart to see. But in terms terms of volatility, and we can see over here, the Aussie is the front and center for options traders, and we have not actually seen this much volatility since COVID, which was this spike over here, and since the financial crisis back in 2018. So a gorgeous sentiment and positioning show that the most bearish skew in 5 years, with hedging costs spiking to levels last seen during March 2020, the COVID crash. Obviously, we just saw that on the chart as well. On a Z-score basis, implied volatility now frames Trump, his tariff push, as a systematic shock, rivaling only the global financial crisis and the pandemic in terms of intensity. So again, the bearish tone is still deepening, as it's still one of the most risk-on assets, Australian dollar. So yeah, in terms of longs, I would not look for any longs. I would only be interested in shorts. So look on the immediate 1 hour time frame to identify if anything fits your plan, or even on the 15-minute time frame, you could look for potential shorts as well. What we, for example, have over here is this area of supply. Now, obviously, we touch into that supply zone during the Asian session, so it's not ideal to get in at that point in time, but definitely just check if the immediate order flow remains bearish, and then you could look to get in on the order flow to take out these lows once again. Could it spike up again? Yes, because there is still potential room for manipulation, but in terms of shorts, that does definitely have my favor. This is the 1 hour fractal high, this is the 1 hour fractal low, so keep an eye on the 15. If we can break this low, maybe get in on the overall bearish order flow for the rest of today. Now, going into GBPUSD, GU is also a pair that is a little bit difficult. What we can see here is, again, some manipulation coming back down to take out the equal lows. Does this now mean that the 4 hour is, or that the daily is fractal bearish? Yes. In terms of kind of like logic from a technical perspective, this is now your daily supply zone. Am I interested to short from it? No, not yet. I'm not really interested in GU at the moment because, again, a lot of manipulation. This is just purely a fundamental push up, fundamental push down. We're exactly where we were last Wednesday here, on the Wednesday evening, pretty much over here. That is when Trump came with the tariff news. So you can see an initial push up, then again a push down, grabbing liquidity underneath the lows. So all the stop losses of everybody who went long on this demand zone, that now has been swiped, and now it's just pretty much back where it was. So I would say sit back on GU, not a pair that I would want to trade. I definitely prefer EURUSD, as that for me is a much more clear pair, respecting the lows at least. So for GU, I would recommend to stay out because I do still see potential for the upside for the pound against the dollar, especially with the fact that the UK is now close to a trade deal as well with the United States, and that the dollar remains bearish. So this could be bullish for the pound in general. But again, wait for kind of like an order flow to be created. It's now consolidating, so you'd want to see like real bullish momentum start to come into the market. Here we did have a 1 hour fractal structure shift, so low break here, high break, and now you're looking for this high to get broken again. This is now the immediate low, so look for maybe some bullish order flow, but at the same time, like the overall immediate momentum has been in towards the downside. But again, what I would just simply say is wait for some form of direction to be chosen before getting involved with this. What we did say last week was that this was your liquidity high. That has been grabbed, so some beautiful price action overall. It did provide us with a reversal. So if you did take that short, which I mentioned was an opportunity last week, congratulations. But yeah, for myself, for now, I'm staying out of GU. As for me, it's a little bit of an unclear and ugly pair. For NZDUSD, it's similar to AUDUSD. What happened is that we grabbed liquidity above this high. After that, we saw it push down again. The Australian or the New Zealand dollar, is also obviously a risk on pair, not a pair that you would want to be long on at the moment. Again, if we look at NZDJPY, what we can see is, again, strong drop down. If we look at NZDCHF, again, a strong drop down, showing that the New Zealand dollar, just like the Australian dollar, is extremely weak. So looking for overall, again, further downside as well from NZDUSD, despite the dollar also being weak. The New Zealand dollar and Australian dollar are just even weaker. To be honest, again, my focus lies on EURUSD. NZDUSD, it's not the best of shorts, obviously. If we look at the higher time frame being the monthly, it is still at a key level of support over here. And we also have interest rate decisions this week for the New Zealand dollar. So I would keep an eye on that. But from a technical perspective, shorts obviously do make more sense. As for now, the daily area of supply here is in control. And this is just the trade that makes sense from a technical perspective. Now, going in towards USD Yen next, we can see that USDJPY has been pushing down lower. Again, very obvious trade with the overall yen strength coming in, as the yen is a safe haven in these kind of market conditions. The dollar being very, very weak. Overall, last week, if you did capitalize on the potential trade opportunity that I mentioned with a swipe of this high to look for short, there were some pips to be gained, but overall dollar yen has been consolidating, as again the Japanese yen is also a currency pair that's being hit very, very hard by all these tariffs. Overall, dollar against the yen is consolidating, so yeah, you wouldn't want to be in this market as of now. Wait for a directional bias to be made. The daily is obviously bearish at the moment, and there is a daily imbalance candle over here which could act as an area of demand. We haven't tapped into it yet, so there is still some immediate further downside possible for the dollar against the yen. The yen is still very, very strong in these kind of market conditions, and the dollar is still very, very bearish. So the immediate order flow and the immediate momentum is still in towards downside, so I would only be interested in shorts and not looking for any longs. Last of all, we have gold. Gold is obviously also a hedge in a market where there is a lot of uncertainty. At this point in time, we have swiped all of the lows, which I've been talking about last week. Very nice to see. Last week we kind of like saw a mini sweep happen over here, and now we've seen the bigger overall sweep happen over here. So from here, this is a nice area to look for potential for the upside once again, after sweeping all of the liquidity. So either we see one more drop down, this is also a nice buying zone for gold, or we will reverse from this liquidity low over here after sweeping kind of like this trend line. So if you want to know if we're actually going to see that reversal, what you then want to do is go onto the 1 hour time frame. So on the 1 hour, what do we see here? We see the change of character happen. So this over here is the high that broke this low. Now this then becomes your area of demand. So what you would want to wait for is maybe another high break and then get in on that newly created demand zone, which will then be the thing or the demand zone that will provide you with the next long opportunity. So that's it for today, guys. Thanks so much for tuning in. Wish you all a fantastic trading day. As you can see, a lot of fundamentals are very crucial, or are forming a very crucial aspect of my personal overall bias of or inside of these current market conditions, and I definitely recommend that you do the same. If you want to stay up to date with all of these fundamental updates, make sure to join the Discord, link in the description of this video. See you there. Have an amazing trading day. Stay safe, and thanks for watching.